weekend all. Ira Epstein with your weekend wrap-up for your agriculture markets, and this is for Friday the 21st of February 2020. So in looking at the markets, I think you understand that we're trading something that has changed the whole landscape, and it's called coronavirus, and it is now spreading. The question is, how bad is the spread? Iran has it, Lebanon has it, Japan has it now, Thailand has it, a lot of countries in Europe have it. I can go on and on. It is spreading. The question is, how much is it spreading? We saw one group in South Korea where a church had its members all together, a large church, and 200 people caught it. The church is being mum. Was anybody in China? How did it get there? We don't know. As for China, figuring out the real numbers, flip a coin anymore. They keep changing their method of counting who has coronavirus, what determines if they have it, how they're doing their count. Do they count prison systems? Don't they? I don't know how you figure that out anymore. But what I do see is no matter what the USDA keeps telling us, China's, other than the immediate needs that it hasn't begun the purchasing yet of the grains that we've seen at least for the phase one trade deal. At the same time, given the scenario, who's pushing them that hard? So when you come to the monthly chart of beans, you're stuck. You're right at the 18-month moving average of closes. I'll call that pretty neutral. When we look at a weekly bar chart, and that's what we do on our weekend editions, we go one monthly and the rest are weekly charts. You can pretty much see where you're caught. You're caught from this 860s into the 948 level, just going back and forth. The overall market is a trading market, not a trend. You've got a higher high and a lower low. A trend would have lower highs, lower lows. What it would take to make a downtrend this coming week would just not be taking out this week's high. So that's the scenario. If this week's high is taken out, you will not end up with lower highs, lower lows. The odds would strongly disagree with that. However, if you don't take out that high, then you probably have the scenario of lower highs, and then the question is your lower lows. What else do we have on the chart? We have our resistance point. We saw where the market failed. It failed in coming up from this low right here on this break, right through here, into the 100-week moving average of closes, couldn't gather much steam and has backed off. You have two layers of resistance, this 899 to the 908 level, as I call it, those areas. The market has found support at the lower Bollinger Band, you see that? And it's come back up. So if the market drops again or doesn't take out this week's high, a target is that number again. Let's assume it goes up. Even if it closes over the 18-week average, you still have this range that you're caught in. You're not in a trend. In order to get an uptrend going, there's only one scenario. You'd have to have an outside week to the upside. In other words, taking out this week's low, getting then over this week's high, and closing over the 18-week average. That's the only scenario I see. There's always things that can happen, but you don't want to play something that's got a very low percentage shot. I'm not saying it can't happen. In the weekly chart with the slow stochastics, they're still pointing steady to lower. So bias down, not a trend, and the market fighting at two levels here of moving averages. In the soy meal, you have a higher high and a lower low. The snooker was the rally today that failed again. This market today got up in a good intraday rally, but it failed. And you can see the market's trying to come down and the support's back at the lower Bollinger Band, but you are very sideways. This is what you call one of these pent-up moves where it's like you're in a pipe and the price is a spring. Which way is it going to break out? If it breaks out to the downside, keep your eye on it. You could get what we call the momentum just staying, pointing down. And then, by the way, if you don't take out this week's high, you have lower highs, you already got the lower lows. You're back into the downtrend. Soy oil is in a downtrend. It's got the lower highs with this week's action. You've had the lower lows. If the market drops, the next support's the 100-week average down to the lower Bollinger Band to negate the downtrend. Last week's high of 31.27 has to be taken out. And if it's taken out, I'll be looking hard to see if you don't take out 29.81 first, because a close then over the 31.86 level could be an upside move. So you always have to have your scenarios. Corn, I wish you the best. This market is just churning, traders. back and forth. I see guys that are corn traders because I'm down on the trading floor, and I know a lot of the people just ripping their hair out. They're looking for a trend. They go, can't even catch it, and it's not moving. That's the best way to describe it. You have the swing line up, the bias down, caught in between the 100-day average and the 18 and momentum trying to point down. In the wheat market, this one grand move ended the uptrend because you then broke immediately in the next month, fell back to that 18-week moving average, held it, but you've got a higher high, lower low pattern with momentum trying to point downward. If the market falls, look for continued support at that 18-week average. A close under last week's low of 538.25 sets off a bear move in the market. In the sugar market, we keep fighting at the upper Bollinger Band. Momentum is still bullish. The market's locked in against that number. It gets over it, it comes right back under it, and it's grinding to higher prices. There's a strong seasonal that kicks in at the end of February to the downside. Will it work? This market's gone up in the face of a pretty strong dollar too, right? Coffee market, a nice bounce. The market finally retreated from this 140 plus area to 95. It got up into this 100-week moving average of closes. Sorry, I said day. It could get back to the 18-week moving average of closes, but I'm not looking at this as anything still but a downtrend on the weekly chart. Lower highs, lower lows, a bounce. Momentum isn't pointing down anymore. It's just sort of flattened out on you. Cotton market, you have a market that's got higher lows, higher highs. It's still looking okay. What makes it look bad? Get under this number, 66.75 now, and close under the 18-week average. You'll turn the trend down and you're putting back into play the potential for the lower Bollinger Band. I think the bulls have their hands full right here defending their position. The cattle market, we had the cattle on feed report today. I viewed the report as totally neutral. It came in at the expectations, but you're not trending in this market. You're stuck now for 3 weeks against this 18-week average of closes. Should the market decide, nah, I'm not going to get a lot of export business, blah, 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 because of the corona and get through the 118.45, then start looking back at this 115 area. Let's assume it goes up. I don't see anything here that throws it into an uptrend. That's the dilemma. In the hog market, nice rally, but stopped where the odds favored it. Here's the market, and just showing you last week, you get your bounce, here you start. Now you come up, you have 2 resistance points. The first is the 18-week average, the second is the 100. That's where you're at. Let's assume it continues on. Even if you take out the 6,900, you have a lower low, higher high. If you don't take that out and you get back under 6,400, what takes place is you start looking at the market as that was a bear market bounce, and now the momentum's down, trend down, and if you turn this part and flip it over, watch out below. It's a very important area. Will there ever be hog business that we get from China? Want to remind you that the way I start you off each day, and it's something you should look at, I think. In the mornings, about 5:30, 5:45, I am recording a video for you. It is not available on YouTube. You're not going to get it on anyone's website but ours or in our charting software if you're a paid subscriber of mine. I cover 40 charts. I'm going to give you the ideas as to what's happening first thing in the morning that I'm seeing in Asia, Europe, back into the Americas. So we're going to cover these markets in a very specific way. The charts will look this way. They're going to have a different look than these do. And when I'm doing them, I'm going to give you both fundamental, technical analysis, points of entry, stop points, and the like. And don't look for me to be a winner on every trade. I'm not. Don't look for me to be a loser on every trade. I'm not. You're going to get the mixture, but the one thing I try to bring is money management, logic to the trades, but it's really about giving you that nudge. You might have an idea on, do I want to stay with it? Am I going for the home run? Maybe I shouldn't keep going for home runs all the time. There's different mentalities I'll bring in. I cover the markets in this exact sequence. In that sequence, you're not forced to guess where you're at. There'll be a slide bar on the video on our website. Just pull on it. It's going to light up foreign currencies, metals, grains. It'll tell you the section you're in. You can get right to what you want, nice and easy. So how do you get this? Go to our website under the word research. It's fully explained. So at www.iraepstein.com, under the word research, fully explained. You can sign up right there at $7.95 for the first 30 days, and it goes by 30-day increments at a time. After that, it moves to either $15 a month if you want to stay with it. You don't have to. Or you can buy a one-year subscription for $156, which is $13 a month, but you pay it up front. Your call. I'm also giving you a sampling of my SPDR ETF subscriber video, and that comes out at 4 o'clock each afternoon. So give this a try. We'll be happy to take care of it, and I hope you support us. Take care now.